Welcome back to the exchange. Stocks are mixed with the Dow pulling back from its record high set just yesterday. But our next guest believes strong earnings growth will drive stocks even higher from here. Joining me now to discuss this is Andres Garcia-Amaya, the founder and CEO of Zoe Financial. Andres, thank you very much for being here, especially in person. We love having you in studio. Let's talk about this back half of the earnings season. All of the big names are done except for one very important one. Some would argue the most important one of the entire season, and it's not Alphabet or Microsoft. What do we think about Nvidia and the impact it's going to have tomorrow?
Regardless of what the results are, what's important to note is that if you look at the options, they're pricing a move up of 10% or a move down of 10% for a stock that's now 6% of the S&P 500. So regardless of what your view is, it matters for macro. And even 2 years ago, it was less than 2% of the S&P 500. So it is the show, especially in August at a time where it's quiet. It could even have a bigger impact than usual.
Do you think it's, from a market perspective, because it is probably, some would call it the second weakest liquidity, trading liquidity-wise, week of the year next to just the Christmas holidays, does it mean that we could expect even more just than the 10% that we would expect in the options market?
Yeah, I think that, look, I started my career in trading, and in August, because liquidity dries up, there's a lot more volatility that could happen with something like this. You got a lot of interns running the desk in the last couple of days.
You and I are here right now.
Yeah, we're here. But what is important to note is that, actually, Bank of America did some research on this. Over the last 2 years, Nvidia earnings had a pretty influential effect on the markets, not just that day, but the following 2 weeks. So it's not just like a daily event. It could carry forward for the next couple of weeks as well.
What do we think about whether or not this story around Nvidia is enough to either propel the next leg higher for the market or give you that concern that the AI perceived bubble by some could be due for a kind of correction?
It has a big effect, right? It's the bellwether for a lot of the other chip stocks, but as well for the broader technology sector. But I would caveat that that's looking at the next, call it, couple weeks, months. There is the fact that earnings are doing well for non-tech sector as well, and that's not dependent as much on Nvidia. In fact, some of the other stocks that are not tech-driven have driven the rally in the last couple of weeks.
So if you're looking at the earnings growth picture and the earnings growth story driving the market higher, what parts are your favorites with regard to earnings growth driving upside for the market?
Yeah, no, great question. First, technology needs to hold up, right? It's such a big component of the S&P and of earnings that you can't really say earnings will be double-digit without Meta and Google and Microsoft continue to perform. But there are sectors like financials, for instance, that have a couple of tailwinds going for them. One is that if rates come down, we were just talking about mortgage rates, you could see financials continue to perform even better than they have recently. You add the fact that their valuation looks attractive versus the tech sector, and momentum's going their way, right? Financials are one of the best performing sectors this year. There are other sectors that could continue to carry the rally.
With regard to the cyclical versus the less economically sensitive or defensive sectors, we've also seen folks gravitate a little bit more towards the utilities equation, the consumer staples, some of the heftier dividend payers. It seems to also click with an environment where the Fed is expected to lower interest rates systematically over the course of the next 12 to 24 months. Yeah, are defensive sectors still in play?
I think so. There's been a rotation already happening, right, from tech into sectors like that. Look, if rates come down, high dividend yielding stocks become more attractive than they used to. But that's one part of the play. There is the fact that if the economy holds up, and I believe it can, right, the data so far supports a soft landing, some of the cyclical sectors, like financials, that do have a cyclical tilt, could perform well as well.
All right. Andres Garcia-Amaya with Zoe Financial, thank you very much. We'll see you again soon.
Thank you.
All right.